Hi, I'm Pam Kruger, and I'm here with Kendrick Maddox. He's one of our advisors in our Wealthramp network from Edge Capital Partners. And I think that today, of all days, it's really important for you to hear directly from one of our advisors who's talking about, what's happening right now. Current events are such right now where we have the world a little bit tilted, a little bit upside down. You're seeing all the financial markets across the board, including crypto, reacting. Crypto assets are down. Gold, of course, always reacts in sort of an opposite direction, is up, and oil prices are up. Now, this is set against the stage where we've done nothing but see a stock market that's gone up. So a lot of us are, what I guess I'll use the term, shook a little bit. So Kendrick, my questions to you are, just have a couple of quick questions. For the people who are your clients, they're hearing from you. I saw what you're saying to them in the newsletter that you sent out this morning. But what about for people who have been in the market, they have a lot at stake. You manage billions, literally, of dollars of your clients' money. What message would you have for folks who are not currently your clients and not under your umbrella, if you will, shelter from the storm?
The message we would have for them is the same message that we've had for our clients all along. So they expect to hear from us, but they expect to hear the same thing, which is really have patience, don't panic, never sell into a down market. Use this as an opportunity to rebalance, tax loss harvest if possible, which is really, really key. The tax loss harvesting is a very important aspect of this because taxes is one of the biggest drain on your long-term returns. And anytime you get an opportunity to reduce those taxes without changing your long-term allocation, you have to take advantage of it. So rebalance, tax loss harvest, and then also maybe start considering putting excess cash to work. If not now or today, at least be sort of thinking about that and looking at that and being ready to put that money to work if the markets continue to come down.
Okay, so a couple of things come to my mind where what I'm hearing you say is it's not about reacting. It's about reassessing. If you don't work with an advisor, you're doing everything on your own. You've been doing a great job. And now it's time to reassess, but with the emotion out of it, and even to the point where if you're a deal hunter or a value hunter, we're in correction territory now, technically, which means the market has come down 20% or more, from its most recent high point. And so that brings out the hunter in some people. But really, Kendrick, it's about managing emotions. So you and I were on a podcast, and it wasn't that long ago. And we talked about the best time to buy an umbrella is before it rains. So just let's remind people what you do with your clients to protect them from the rain as you're going into this kind of volatility. Because when you and I did that podcast, it wasn't that long ago. Yeah. We sort of saw, we weren't predicting anything, but you could sort of see where things were heading. So what are some of the ways specifically that you get that umbrella out before the storm for people?
Well, if I remember correctly, we talked about the second biggest sin of investing is selling a growth asset when it's down. So if you're in a situation now where your equities are down, you don't want to sell those because it's so difficult to make that back up. So the best way, or there's a couple of ways where you prepare yourself. One, always know your cash flow needs. You don't want to be in a situation where today you realize, or this week or next week or shortly thereafter, you realize that you need cash for some sort of expenditure, whether that was normal living expenses or a house purchase, a boat purchase, tuition payments, whatever it may be. You have to always plan ahead for your cash flow and your expenditures. For some people, that's having a year's worth of cash on hand. For others, it may be having 2 or 3 years of cash on hand, just because a really bad downturn in the market could take much longer than a year to come back up. So you never want to sell the growth asset. So one, just make sure that you're always ready for all of your expenditures. The second thing is you always should be rebalancing. So when we had such a good year last year in the stock market, if you're an investor that's say 70% stocks, 30% bonds, and at the end of the year, you found that you were 75% stocks because they've risen up, that's the time when you pull back down to your 70% allocation. Now, if the market's falling and you're pulling it back down and maybe you wake up and you're 65% stocks, you want to put it back into equities and go back to your 70% allocation. So rebalancing is not just rebalancing when the stock market's down, it's also rebalancing when the stock market is up. And if you had done that last year, then now you'd be in a good position to take advantage of the market downturn and put more cash into growth equities.
Right. So a couple of things here that you said that I think I want to point out that are really important. This is a very short video. This is intended to help people who are trying to think through the how do I not react and make the wrong move, because this is when people make their most expensive mistakes because of what you just said about selling stocks when they've just gone down. Because we know that after a correction, that's when we see the steep bull markets, the steepest curve there. Now, it's really important to focus on a couple of things that you said that are valuable. A 50% loss, 50%, not 20, 50% loss, the math of losses in a stock portfolio. If you sold out of panic and worry that it's too much for you, that means you don't have to make up 50% to get back up to where you were. You have to make up 100%. Your portfolio has to pull forward 100%. So that's the math of why you don't want to go sell when there are losses for many other reasons as well. And the other thing is, I like what you said about reminding people that what you're doing with your clients ahead of time is you're building liquidity into your plan. You're already building that into your plan. So if your client is a retiree who needs 3 years of retirement draws, 3 years worth of cash flow, then that money has to be already in cash, built in, that liquidity built into your financial plan. I just think a lot of people think of you, Kendrick, as, oh, I'm going to go to him and find out some great stocks and some investments. And it's the whole picture.
It's really more about behavioral finance than stock selection or asset selection. But let's harp on one point you just made on the decline. So if we fell 25%, which is very reasonable, and that happens a lot. If you fall 25%, you have to go back up 33% to get to even. Now, the reason you don't want to sell is because let's say you fell 25% and then you sold another 25% because you were really, really nervous. Then that's when you have to double, as you mentioned. Then you have to double your returns in order to get back to even.
That's just to get back to square one. So the math of losses is what Warren Buffett's always tried to teach people. So, this is really, again, this is intended to help people who they're not already working with an advisor like you, who looks at the whole complete picture, which really involves both the financial plan that builds the liquidity and the buffers into this. In other words, that's the umbrella before it rains, as well as the strategy for going forward to take advantage of any dips. So yeah, this is a pretty exciting time for you this week. Anything else?
This is actually what we get paid for. And this is what we enjoy about our job. One, taking care of clients, talking to them, making sure they're comfortable, they're not panicking. But also, this is when we're in here right now, rebalancing and tax loss harvesting, because we don't know if the downturn is going to last, a week, 6 months, a year. So we have to go ahead and take advantage of those opportunities as soon as we can.
Exactly. I really appreciate that, because I always like to say that when it's done correctly, if you are working with the right advisor, that fee that you're earning, Kendrick, that fee pays for itself. in
Yes.
helping you through these times, through blind spots we all have when it comes to investing, from making rash decisions, from not having enough cash, from not understanding tax loss harvesting and other tax-focused planning. I'm going to wrap here. I'm going to say thank you. I know you're busy. You got a lot going on. And I just want to say thanks a lot for taking the time, because I think this is a really good message, right on point for what people need to hear. And by the way, Kendrick Maddox, Edge Capital Partners, an advisor in the Wealthramp network. You can contact me at askpam@wealthramp.com if you have any questions. All right. Thanks. Thanks, Kendrick.
Okay.